Hey everybody, what's going on? And welcome to your market briefing for the week starting December 30th. Hope everybody has enjoyed the holidays. I have been enjoying taking some time off and having a good time over the last week or so, and I'm looking forward to another week with a little bit of holiday in it. Not totally looking forward to everything that's been going on in the market. It has been pretty tumultuous, or fairly tumultuous week or two. But we'll take a look and see what's going on. There's just been a ton of uncertainty, so let's dig into this here. Everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice, and all trading decisions are your own and done at your own risk. So in today's video, earnings are still on hiatus. There's basically nothing coming this week. If anything pops up, well, I'll put it in the morning briefing. We've got a little more data this week than last, so we'll take a look at that. We're in a period of really heightened uncertainty, in my opinion. This is like, I think I was like really tempted to put in here like extreme uncertainty. This market, I think, is on a precipice of going either way. I mean, I still think there's a good chance we could rally strongly. I also think there's a really good chance that we could move into a fairly serious correction. And I would argue that, we're kind of in a bit of a correction right now anyway. When we look at a chart of IWM, we see that technically, yes, we are in correction. But we're not in a correction in the SPY or the Qs, but we're getting closer to it. So we'll take a look at that, and I'll just sort of express my thoughts there for whatever they're worth. It's I think the takeaway here is just, heightened uncertainty. And if I use the term, I don't know, or I'm not sure, or, that sort of thing a lot today, well, that's why. So there'll be lots of interesting charts, of course. We'll look at some of our previous setups, we'll look at some new setups, and we look at a few setups, but not a lot. And because of this uncertainty, everything is a little bit low conviction. Some of these setups, though, are great for going either way, going long or short. There's a fair bit of that, actually. So I think it's going to be an interesting video today, so let's dig right in and look at our earnings. Oh, there are none. All right, let's just keep going. Coming up this week, we have Monday morning, Chicago PMI, and pending home sales to open the week up. There's a little bit of home data this week. As you can see on Tuesday, we got the home price indices. There's two of them. They come on Tuesday, and then it's New Year's Eve on Tuesday, so volume is going to be very light. To be active in the morning, and it'll just drop right off as the day goes on, much like Christmas Eve, except we don't get to close early on New Year's Eve, unfortunately. I'm not sure. If we close early on Christmas Eve, why can't we close early on New Year's Eve? Most people are going home early anyway, so like I said, it's going to be a bit of a weird day with the volume dropping off throughout the day, and then probably a fairly quiet close. We all know when volume gets light, volatility can increase. Wednesday, the markets are closed. Happy New Year. Thursday, we have unemployment claims. Friday, ISM manufacturing PMI. So pretty light for data, but there are some data points that can move the market. All right, let's go ahead and take a look at these markets. We'll start with the S&P 500. Are okay now. Technically, officially, we're not in a downtrend yet, but this candle we had on Friday, we kind of started to roll over. It's possible we've put in a lower high. We can't, officially call this a lower high until we put in a lower low, until we get a close below this low here, right? And that's a ways down. This candle on Friday is interesting because we gapped way down. Oops, I forgot to draw that gap in here before we started. This is an important gap, so I want to get it in. Okay, there we go. There's our gap. So we gapped way down on Friday morning after a few days of fairly strong price action. We lost momentum on Thursday and gapped down Friday. but we came way down, we cut below the 50-day moving average, and we popped back up again. And this is really kind of almost a hammer candle, and there's pretty decent volume on it. So, on the one hand, this candle is bullish, even though it's red. And that says, hey, you know, we've got a really good shot at moving higher here and attacking these all-time highs. On the other hand, you know, this candle asks the question, is this going to be a lower high? Is this a new downtrend? And, you know, we don't have the answer to that yet. But this is something we definitely need to watch out for. And when we look beneath the surface here, when we look at something like RSP, which is the equal weighted S&P 500, well, look at this. I mean, this, you know, this actually may very well have gone into correction mode. Sorry, I should have measured this sooner. That's not how I'm going to measure that, is it? Here we go. Yeah, not quite into correction mode, but not that far off, right? Okay. But definitely equal weights underperforming the senior index, you know, the S&P 500, which is a cap-weighted index. Kind of a bit of a bear flag forming here. You know, so this is not ideal. This is not a healthy uptrend that, you know, we're looking at here. So we kind of really need to turn this around. And this is saying be careful out there. So that was SPY. Qs, pretty much the same thing, but relative strength to SPY. Okay, Qs are almost forming inside a little bit of a pennant here. Same thing with a bit of a hammer candle on Friday, you know, cut below the 21-day moving average and bounce back up. Again, looking like there's a potential for a rollover here, leaving a gap behind. Let me get that in. Leaving a gap behind that we have to resolve. So, you know, there's something here for the bulls and the bears. And, you know, we may know tomorrow on Monday which way this is going to go. Let's look at IWM. You know, this one had a bit of a recovery last week. But again, had, you know, a Friday that wasn't so good. This candle isn't as nice. You can see that, you know, we were in a downtrend in this. Over the last couple of weeks, that downtrend has accelerated. We came back up Thursday right to this major support resistance level, and this has acted as both support and resistance a number of times and going back for ages. This right here, right? I mean, going way back into 2021. It's a really important level, and we failed there. So we have not, you know, put in a lower high on this leg yet. But there's potential for that. And you can see that we did go into correction mode. So we're really still in correction mode on IWM, on these small caps. So that's a little scary. We need to break out above here. So again, we could break out above. And, you know, it'll catch a lot of the bears off guard. They would lose the battle here. And I think we could have a strong rally. Certainly up to the 50-day moving average, more likely up to this downtrend at the very least. So, you know, we want to watch out for that. But we also want to watch out for, you know, the sort of continued down rollover and then, you know, confirming the lower high by breaking below this low. And that just brings a whole bunch of stuff down in here into play. You know, including the 200-day moving average. I mean, we cut below and closed below that for a few days in a row. You know, things are not looking good for this market. So again, everything I'm seeing here on these charts, and a lot of the chatter I'm hearing too, with, you know, people who are normally bullish, you know, people whose opinions I respect, who are almost always bullish, starting to get a little bearish. So, you know, that could be a signal. But that also could be a signal for, hey, you know, let's catch these new bears off guard here and cause the maximum amount of pain. Because if we all suddenly turn bearish and then the market flips, you know, that would be painful for us. So I'm in extreme caution mode right now. But I'm not, and I'm definitely locking in some profit on some of my good trades. But I'm still hanging on to the major portion of my trades that I still have a lot of confidence in. So that's kind of where I'm at. So let's take a look at the volatility index. There's more evidence here that things are going to be okay. So we had the big spike up, we pulled back. We had a big spike up on Friday and it pulled right back. That's a good looking if we want to be bullish, this is a good looking candle for us on Friday. 10-year yield. This is one of the things that scares me. We're getting way too high on this, but at least over the last couple of days, momentum has slowed. I don't like the hammer candle here in this on Friday. This is sort of contradicting the hammer candle in the markets. We're up at 4.6. We're getting way too close into way too close to 5. And eventually, this is going to affect, if this continues to go higher, this is no doubt going to affect the stock market. I mean, it already is to a degree, right? It's affecting small caps, but it's going to start affecting the entire market. It's going to start affecting those large caps if this continues higher. Because why would you take the risk of being in stocks, the elevated, and I'd argue that risk is a little elevated right now, when you can go and get, near 5% in your treasuries, and other bonds. So we're, at extreme risk, I would say, of seeing rotation from stocks into bonds and treasuries and these higher interest yielding instruments. Okay, let's take a look at our dollar. Sorry, bear with me one sec here. We'll bring this over. There we go. All right, so this is our dollar index. And again, we're saying same sort of thing we're seeing with yields. We're seeing this move higher, but we've certainly lost momentum over the last week or so. So that's great to see. I'm happy about that. This could go maybe a little bit higher as and especially as with, we're getting closer and closer to Trump actually taking over, even though he's really been acting like he already is president. And that's partly due to the fact that I think Biden has just sort of let him. But whatever. I don't want to see this go higher, but I think the bigger legs of this up move are done now, and any upward momentum is going to be quite slow. Let's take a look. Actually, while we're here, let's take a look at some crypto, because we're seeing this kind of start to roll over. Certainly we've had a bit of a pullback here. It's fairly minor pullback right now. It's kind of acting. I'm just going to adjust support levels in here. I think I need to bring this down around here. That's a pretty good spot, actually. Yeah, I don't like that I've had to adjust this, support down lower, but I think it's a better fit here. I don't like that we've, cut through all of these moving averages now. That's not ideal, but we're also not seeing, the volume is low on this move down, right? We're not seeing a panic out of here, so that's good to see. And we know that there are some big players who are buyers as this comes down. Ethereum, same kind of thing going on here. Maybe we've got to be looking down in here or here. Maybe the next real support level is gonna, key off of somewhere around here. So watch, if we break down any lower here, watch that we find support in here again. If not, we're going to be coming down to, we're in around the 3,000 level, and that's where the 200-day moving average is, maybe just a little bit higher where all these lows are. Yeah, so crypto is showing us the market is in a bit of a risk-off mood. Right, let's move over to our dollar cost averaging system, and we can see that, as warned last week, SPY has now turned off. Remember last week, IWM had turned off last week, and then we're kind of looking at SPY and go, yeah, if we can see any more pullback in SPY, it's going to turn to risk off. And it has. The Qs have not yet, though, and we still got a lot of room before we get this, turning off in the Qs. But IWM is still very much risk off and deepening into that. All right, so let's move on to our global indices. We'll look at ACWX. This is the all-world index excluding China. And we see that we had a nice little bounce in here and the one pullback day on Friday, but forming pretty much a hammer candle, some decent volume and green volume as well. So not looking so bad there. Gold, I don't know what to make of this. It's really kind of looking indecisive here. Crude oil, this action here is more interesting. Have we kind of put in a lower high, or sorry, a higher low here? Maybe. We had that one-day pullback, then we recovered from that pullback on Friday. I think this is really interesting because, everybody is super bearish on oil and the energy sector. Energy sector excluding nuclear and some of the alternatives that are popular with data centers right now. So, yeah, I think this is interesting, and we should watch for a move here. Now, let's look at XLE. We'll move on to our sectors. We'll start with XLE. And we'll see that in XLE, we've got this nice bear flag forming. I mean, we've just had this massive plunge. We've come down to what is a fairly major support resistance level in here. It's certainly been holding, since the beginning of the year. And we bounced there quite nicely very recently, moved up a little bit, but technically this is a bear flag. It's a beautiful looking bear flag. Now, I think, given that everybody's already bearish, how do you who's left to go short in this? There are no bulls right now, so nobody's buying. But what if we start to break out the top of this? What if we get some serious momentum to the upside here? Well, everybody's going to start covering their shorts, right? If everybody's already bearish, then there's a ton of people who are going to get hurt if we get a strong upside move. So I think that that's a distinct possibility we should watch for. And I've got a play for that coming up later. So let's look at XLY, consumer discretionary. Choppy, that same sort of price action where, we have to question, is this rolling over? Is this a lower high? Or does this 21-day moving average hold? That's an unanswered question right now. I should also note that some of the price action, watch out for some of the price action here in a lot of these spider ETFs because they did pay a dividend recently. Okay, and some of them, I know there's some ETFs that have paid, pay a dividend yearly, and that really affects how the chart looks. XLI, industrials. Bear flag, right? Don't like that, but I do like, look we've got a lot of green flags in here, all right? We've got a lot of, it's, open lower, move higher kind of thing. So that's kind of bullish. So this is one of the things that's okay, I am worried about downside. I am worried about this being a bear flag, but I'm also cautiously optimistic because of the price action within that flag. XLF financials. Pretty much same thing here, right? Can easily call this a bear flag, but some of the price action within the bear flag is good. I mean, you could say that we had a 3-day bear flag and then we kind of broke out to the upside a little bit. We found some resistance at that 21-day moving average, but this consolidation, could very easily break out to the upside. XLV, healthcare. You'll notice I've skipped over some of the defensive sectors, staples, and utilities. They're not really showing us much. So again, just as we had a bear flag, you know, kind of in here, fake out to the upside, move down, bear flag here, you know, followed through the downside. This one up here, you know, so we've had a lot of bear flags in this that are looking kind of just like this one that's forming here. But, you know, that could lull the bears into a false sense of security, and one day one of these flags is going to break to the upside. I don't know if it's this one or not, though. Communications sector. Starting to get a little messy, starting to look kind of toppy here, right? We've definitely had a bit of a rollover. You know, we had a little bit of a move up, and that rolled over, but then we got a hammer candle, and it was, you know, right at a kind of a weak or minor support level, but nonetheless the support level is just above the 50-day moving average. You know, decent volume on that hammer. It's got to follow through on Monday, though. XLK technology. I mean, this is just a choppy mess in here, really. You know, up near highs, but it keeps like kind of moving up to that all-time high, right? And then pull back a little bit. And, you know, this candle on Friday is maybe not as nice as some of the other candles we've seen, but it's not horrible either, right? It recovered a lot of that down day. So, you know, again, this is where the indecision comes from this kind of look. All right, semiconductors. We saw, now we don't see it here in the semiconductor ETF, but we did see, we did see, you know, we do see some of this recovery that we saw in a lot of the semiconductor names, you know, over the last week or so. And then followed by a little slowing momentum and a little move down, and then a little bounce as we dig in here. You know, we can see the hammer candle. You know, right now, if you're a mean reversion trader in semiconductors, you're loving this price action. You know, I mean, you know, how many times, you know, could you just bought a low down in here and sold the high up and around here? You know, you've done really well. And we've had another move off that low. Didn't quite get up to, you notice the highs are not quite as high anymore. They're not really declining either. So again, another chart that is saying, I don't know what to do with this. You know, I'm not really a mean reversion trader, right? So this just leaves me in, you know, completely indecisive and in hands-off mode. But it, you know, I'm starting to like think that maybe we should be taking a closer look at some individual semiconductor names. There may be opportunities there. All right, so speaking of semiconductor names, we could look at NVIDIA. If semiconductors, you know, start to roll over, I mean, this is going to be the one that, I mean, we can see a serious move down in this now. You know, it had, so, you know, we've been looking at this head and shoulders top. We had a little bit of a break to the downside. They immediately bought it, right? But we spent some time in there. And we come up, and where do we come up to? That trend line, the underside of that. This is an important trend line, right? I'm not even going to show you how far back it goes, but it goes way back. Right up to there, we kind of roll over again. We don't roll over very far. We get the hammer candle. Gotta follow through Monday. Meta. Some interesting price action here as well. So look at, I mean, I you know, now that we're into these Mag 7, you know, we gotta talk about these stocks in the context of the market, because really this is what's been holding up the indices. When we've been seeing these equal weights roll over, you know, when we're seeing the small caps roll over, the reason this really not showing up in the indices, the major indices, the SPY, the Qs, the Dow even. Well, actually, the Dow's rolled over more than others, and that's because of industrials. But and don't get me started on why the Dow is a stupid index. But anyway, what we're not seeing massive rollover yet in the Mag 7. If we start seeing rollover in these as well, that's when the market's going to get really scared. That's when a serious correction is going to happen. It's probably going to happen quickly. And that's when people are going to start talking about moving into a bear market. Because the last phase of a bull market is when your mega caps roll over, when these stocks that have just been pushing this market along forever, when those start to roll over, that is typically the last phase of a bull. And I'm not saying that's what's happening right now, but this is a warning sign we need to watch out for. And this is something that you're going to hear people talking about if these Mag 7 do start to seriously roll over and bring the indices down with them. So this is, another thing that kind of scares me right now. But here we are in Meta, and we've had, we had a pullback, we've had a nice bounce, a little bit of, this scary kind of pullback on Friday, but it bounced nicely. And, not exactly a hammer, but pretty darn close. Apple. Have you guys looked at the valuation on this thing lately? What is the PE, like 42? That's really high for, such a mature company like this. Am I missing something? Is there something that justifies that kind of valuation? Again, a little bit scary here. But, this chart is just beautiful. So, I don't know. Does it keep going? The chart says so. Amazon. A little choppy here, a little potential rollover, hits the 21, it bounces. This has been mostly well behaved off the 21-day moving average. Gotta follow through Monday. Netflix. We're seeing some consolidation here up in the highs. Looks like a lot of the other charts we've been looking at here. A break in here could get bad quickly, but it just looks like it's going to want to continue to consolidate, and maybe this turns into like semiconductors where we get some sort of mean reversion action that goes on for some time here. Google. This is been so volatile and messy in here. It's a tough call on Google. Microsoft. I think of all the Mag 7s, this is the one that's kind of rolling over the most. This has, look at, I talked about how, we had that, we had a pullback, bounce, right? And, the lower high was unconfirmed. Well, in Microsoft, that lower high is confirmed. So this is in a short-term downtrend right now. But... we had a nice bounce off of, the 50-day moving average, the 200 just below that. Half decent candle, it regained half of the candle's height anyway. There's that big gap there. It didn't regain, half of that. But, interesting, but certainly looking like it's rolling over. And Tesla, this is down 5%. This is, of all these stocks, this is the weakest on Friday. It didn't bounce, but it hasn't confirmed a downtrend yet, right? Hasn't confirmed a lower high yet. Got a little ways to go on that, and that little ways to go brings it to the 21-day moving average, which is where you would expect it to bounce. It did break through and close below this 10-day moving average, and that has been a good moving average for this stock. So a little concerning here in Tesla. All right, let's move on to our setups. And as usual, app is still on the list because it keeps giving us plays. This is just a beautiful stock. All right, last week, if you remember, I talked about it. So we had this, we went into the week with this wide consolidation. And I'm going, okay, yeah. So we've seen some volatility here because we were looking at the narrow range consolidation, looking for a breakout above. It got a little wired, it got a little more volatile. And I said, hey, if we can consolidate tightly up in the top of that range, I get really interested. Well, look at exactly what happened. I haven't changed anything here. I drew this box for last weekend's video. And so we've got this nice tight consolidation. We had almost like a little fake or potential sort of fake out move to the downside here. Sure, we closed out of the top of that consolidation, but I think this is primed for a move higher if the market goes higher. This is, if I want to play the market moving higher, this is definitely one of the stocks I want to jump into. I think we could easily see a move here. And look at the size of the move we can get out of this, right? We're at 335 right now. We can get a move up to close to 420, up to this 52-week high. And that can happen very quickly. It happened in, 4 days previous to this. So this could definitely, by the end of the week, we could be up at 420 easily. So I want to be part of that. Well, I am going to be part of that, but I want to be a bigger part of that. Because as you know, I've still got a pretty healthy position in this. But I would definitely take a few day swing trade in this, and probably with a fair bit of size too. If the market is moving up, if the market has decided that, let's catch these bears off guard. All right, CROX. We looked at this last week. So we were looking at, so where were we last? Oh yeah, so we were looking at this 2 weeks ago and decided to, to continue to take a look because of this green candle, basically. So we were actually looking for, a few weeks ago, a break to the upside, to start moving into this gap and kind of see what happens when we start moving into this gap. Well, we got a break downwards out of that. And then so this would have been a week ago Friday. Yeah, a week ago Friday, we got this big green candle. And then I thought, this is interesting, but what I want to see is a setup here. I want to see it consolidate under this gap again. So I drew this little box. And it's, aside from this wick here, it pretty much consolidated almost exactly inside that box. Even actually tighter. I'm going to tighten this box up now. It's consolidating in there a little bit tighter. So this is another one that I think it's ready. If the market is ready, if the market is ready to explode higher on Monday, then this is a stock that I want to be in. Because I think we've had a little fake out, here, and maybe it washed out some people who wanted to sell in here. So maybe the next time we get up in here, there are fewer sellers to slow this thing down, and especially if the market is exploding higher as well. Next one that we were looking at last week is Doximity. And we were looking for, let's see, this would have been the Friday. Oh, that's right, I remember now. Yeah, we were talking about being late on this. And then we wanted to see, because I thought, okay, maybe this can make another leg up, get up into this pivot high here, and then consolidate. Well, it didn't quite get up that high, but we do have a nice little consolidation here. So this is sort of like, I'm a little more unsure what happens next on this. I mean, it's kind of, it's kind of a bull flag that we've got going on here, which is great, but it's kind of just under this pivot level. So when it breaks out here, does it have enough momentum to go through the pivot level? Well, if the market is really strong, then it probably can get up and through this pivot and keep going. I would have preferred, obviously, that we see a consolidation up in here. But I think this is playable. Of the three that we've now looked at, this would probably be my least favorite, but I think, it's probably worth a go if the market is looking bullish. And one thing, they're at a warning here, okay? One of the things I will be watching out for and think you should watch out for is that there's a fake out to the upside. That, we're all expecting a Santa Claus rally. We kind of had it, sort of. It's been a little tepid, but we're all expecting it. And one of the ways that we as bulls can get hurt is that the Santa Claus rally starts, and then they come in and they just slam it. They shut the door on that. They pull the rug, whatever, however you want to call it. That would be painful for the bulls. It'd be painful for me if that happens, because I'd be jumping in all these trades. But I'd also be very quick to jump out, and that's why that rug pull can happen. So that is definitely something to watch out for. Okay, let's move on to setups this week, and it's light. Okay, on new setups. I haven't found anything. You know, a lot of stuff just looks so indecisive. But here's one that is one of those plays. This is an energy play, right? And it's one of those plays that could go either way. This is just a fantastic setup to the long side and the short side. All right, so let's look at long side first. You can see that we are, okay. So we've got a bear flag here, very well defined bear flag. You know, the bears are thinking this has got to break to the downside. Nobody's bullish on energy. The bears are asking themselves, why are these candles green? Why is this going up like this? The bears are saying, hey, look, it can't even get through the 200-day moving average, right? I mean, it's beautiful. It's like it's forming right under the 200-day moving average. It's forming right under the 10-day moving average. It's a fantastic bear flag. So expectation is this breaks to the downside, and you can certainly play it to the downside if it breaks to the downside. However, I think a better play on this is if we see a break to the upside. And again, this requires the market to be breaking to the upside. This requires oil to be going up, some catalyst in energy, which may require some catalyst in the overall economy. And I just don't know where that comes from this week, but who knows? Maybe there's something that causes this to move higher. In that case, it could go very quickly. And, could very well go back up into kind of this area here. Where would that be? Around 56? You're saying, oh, that's only $2. But that's a pretty decent move in this ETF. This is not an ETF. It kind of moves like an ETF in this company. Maybe you want to look around for some other energy names, maybe some smaller energy names that have got the same kind of formation going on. Play that instead. But yeah, I think that... this could get you the $2. That's 4% in a day. So yeah, I think it's worth keeping an eye on, sending an alert just above this candle. Next one is SHAK. Maybe hasn't quite matured enough yet, but this is sort of a bit of a bull flag. Nice tight consolidation. This is fairly tight for this stock. In case you're having, if you can't see that, I'll just draw this in a little bit here. It's got kind of a base like this. You could also even really kind of draw a little bit of a triangle in there. Here, let me get rid of that for a sec. It is forming a little bit of a pennant. So maybe if that tightened up in there, a couple more days inside. Let's say the market doesn't go tomorrow or Tuesday, closed Wednesday, and then Thursday or Friday. Maybe that's when the market decides to take off. If this continued to tighten in here, yeah, I think this would be a pretty decent little play. So that's it. That's all I got. Let's, before I go, just put that back in there too. And we will move back over to that. All right. Oh, I haven't done the new calendar yet. Been, like I said earlier, enjoying the holidays. So coming up this week, obviously New Year's Eve. The first would be right here. Markets are closed. And then we get a couple of days open before we hit the weekend again. I will have the new calendar posted sometime over the next week, certainly by the time we do another video. And we might have a session coming up in that week. We haven't done one for a little while. So, Happy New Year, everyone. Looking forward to seeing you in the Discord. Again, it's probably another slow holiday week with potential huge volatility. Basically, be careful out there.